Good evening, everyone. Who enjoyed the auction process? Who was a bit overawed by the auction process? Look, it's good for you to have that kind of exposure to that sort of thing, because they are pretty high pressure, but like Carl said, there are some good purchases to be had at auctions as well, and they come with a little extra work. Just preparing yourself ready for that time at auction if you want to win a particular house that's being sold at auction. So I thought I'd do a few hands up first. Who here are first home buyers? Awesome. Who here are ready to purchase already? So are currently looking? Yeah, perfect. People without a 20% deposit? So looking to use maybe the welcome home loan, for example? Just trying to get a gauge of where to see the slides are. Okay, look, I'll carry on from that point then. Got technology in front of me. So the summary today of what the things I'm going to talk about should take you through just the basics of start to finish on the what's required to get finance when purchasing a home. So direct to bank applications, where you've got a 20% application, the welcome home loan where you have a 20%, less than a 20% deposit, the lender's expectations to recover over some of the KiwiSaver things, more from the finance angle rather than the legal angle, Homestart grants, throw in a few there, overall summary, and then we've got time for questions at the end. So you're going to have 3 or 4 different professionals up here by the end of this. So if you think of any questions, hit them up while they're here, because it's all free. So a direct to bank application means that we go directly to ASB or BNZ or Westpac or a bank out there that has a product where you can use different levels of deposit, but you're not using the welcome home loan. So there's 10% deposit options, 15, 20 and more than 20% deposit options. The points of interest here, less than 20% equals no pre-approvals. So at the moment, if you're trying to get a house in a direct to bank application by not using the welcome home loan, we have to go out and find a house and have an offer accepted first before the bank will start assessing an application. Does that make sense? It just means that it makes it a little bit more rushed at the time that you find your house, because you're doing everything at once rather than having a pre-approval. Less than 20% it generally means no discounts and no contributions to legals, or in other words, cashback, and lenders' mortgage insurance is charged. It's something that the lenders out there have to insure the mortgage, and they pass that cost on to you as the end user. Direct to bank criteria, it's a full application, it's assessed at 7.8%. The assessment rate they use now is to make sure that they're being responsible in the way that they're assessing the application. So what this means is that although you won't end up with 7.8%, to make sure that they can see that you could take, as if interest rates go up, they service it at a much higher rate than what the current rate is today. So it does make the servicing criteria direct bank with less than a 20% deposit quite hard to pass. You'll also see something called the uncommitted monthly income pass. It's just what they look for to make sure that you've got enough fat in the income that you're earning to make sure that you can afford the loan. That pass has to equal $1,000. In a moment, when you see the welcome home loan, you'll see that that's considerably different. New Zealand resident is required as a minimum, and there's only one bank that does that out of the 6 or 7 out there. Deposit funds through savings, KiwiSaver, Homestart grant, a gift, or equity through a family's existing property. Lenders' mortgage insurance, it's a one-off fee or a loaded interest rate. Again, I can go into that in more detail if you come and see me. The different banks do it differently, so there's no point going into it in any detail today. As I mentioned before, there's no pre-approvals and no as-is, whereas purchases. Just an interesting note around as-is, whereas there's a lot of those coming back on the market at the moment. We are finding that they have been fixed. And out of those ones that we are completing, we'd only be getting about 20 of those across the line out of every 100 that we're doing. So even though they are fixed and up to code and PS3s, PS4s, engineers reports, building reports, everything you could ask for under the sun about a particular house, they're still falling over because the banks are not that keen on them. So just be aware, if you're seeing what seems like a good deal, maybe it will be hard to get it across the line. Finance options for the Welcome Home Loan, between 10 and 19%. If you have 20% or more, then Housing New Zealand say, hey look, this isn't for us, it's a direct bank application which we've just covered. The points of interest here, pre-approvals are given, even though you've got less than a 20% deposit. Discounts on interest rates are given. A new lender has just come out with a cashback option as well with the Welcome Home Loan. Discounts on the lender's mortgage insurance, so it's subsidised by the government. It just makes it a lot cheaper to get into. And the assessment is a lot easier than the direct bank assessment that I've just shown you. So, what they're looking for. Once again, it's a full application, but you'll notice that the assessment rate is only 6% and not 7.8% like it is direct to bank. The uncommitted monthly income passes only $100 instead of $1,000. The permanent residency is required, or citizenship obviously. So if you're only a resident at the moment, unfortunately the Welcome Home Loan is out of reach. Deposit funds, again, savings, KiwiSaver, Homestart grant, gift or equity in a family member's property. The lender's mortgage insurance, as I mentioned above, is discounted. Pre-approvals are given, and again, no as-is, whereas properties. So significant advantages here if you fit the criteria for the Welcome Home Loan. Over going direct to bank. It's simply so much easier to get into. Lenders' expectations, these are pretty much what you'd expect, hopefully, if you're getting into looking to buy a house. So the affordability, can you afford the loan? It's obviously a criteria that if you can't, it's going to pretty much decline the application pretty quickly. Deposit funds, there's LVR restrictions out there at the moment. They're pretty strict. Not so strict for first home buyers, but very, very strict if you're looking at buying rental properties. Account conduct, they'll be looking for 3 months worth of bank statements, and on there they're just looking for no unarranged overdraft fees. They're not really looking if you're buying McDonald's every night down for dinner, or if you're going out to the pub or things like that. It's more if you happen to frequent the casino every night, or there is some payments maybe to Harvey Norman that hasn't been declared in the application. So that's more what they're looking for in your history, and to make sure that outwardly at least it seems that you've been good with your money. Credit check, they're looking on the credit check to make sure there's no misdemeanours. If there is, we need to highlight them first and see if there's ways of using different products to get around the misdemeanours that might be on your credit check. Evidence of all consumer debt, and KiwiSaver and Homestart current pre-approvals are required as well as part of the application. And then of course there's the obvious one of identification. The KiwiSaver rules, so some of this has already been covered, so I'll make it reasonably quick. Must have been in KiwiSaver for 3 years before you have access to your funds. It's for the first home purchase. It's also, there is a second chance option. You have to make your application for the second chance to Housing New Zealand, and that gives you back access to your KiwiSaver funds. There's no cap on income if you're using the second chance, the rules. $1,000 must retain in your KiwiSaver account, so don't count on all of your KiwiSaver coming across for the purchase of the house to aid in the deposit. Can be used in direct to bank applications or the Welcome Home Loan application. The Homestart grant, again, already covered some of it. Must be in KiwiSaver for 3 years before you have access to the grant. For the first home purchase and the second home option, you can use the Homestart grant. Income caps, as mentioned before, 85k for single and 130 if you're making the application together. The kickback, it's triggered by how many times you've got the government kickback every year. So if you put in $1,040, you now get $521.47 back, or something like that. For every one of those $521 you get a tick. When you reach 3 years, you get $3,000, and when you reach 5 or more, you get $5,000. Double the grants for builds, and like I was mentioning before, you can buy an existing home that has already been built as long as no one's lived in it, and its code of compliance is no older than 6 months. Again, the Homestart grant can be used direct to bank or for Welcome Home Loan applications. Now, here goes some derived expenses or possible expenses at certain price points out there. And you'll notice that in Cole's example there, at $375,000 purchase price, you're going to end up around the $394 a week. And that's more using, the Welcome Home Loan than direct to bank. It would be slightly more expensive direct to bank. As you can see, I've capped it at the 550. 550 in Christchurch is the most you can go to if you're looking to build a house using the Welcome Home Loan, or indeed using the Homestart grant. So the bit of humour that I was telling you before, this is how a seller views their home when they place it on the market. This is how you view the same property. This is how the lender views the property. Remember, it's the same property. How the valuer views your property. And then finally, how the council views your property to assess rates demand. I hope you've enjoyed that brief summary. We are here to help with all of the needs and requirements of buying a first home, or indeed if it's your second chance. We're helping out some of your young ones if you're here to help out some of your kids. Really, if you guys want to pop up now, then we can answer any questions that these guys might have. Brent's disappeared, but Carl.
Yeah, I'm coming.
So does anyone have any questions out there about what we've talked about tonight? Who wants to kick us off?
We must have answered everyone's question.
Yeah, pretty good.
Already. How good's that?
Yeah, go for it.
It was mentioned, ask questions and lots of questions. What's a question that each of you would ask when you're going to look at a house?
Me first? There's a number of them. I would, first of all, try and determine why it's been sold. So ask the vendor, or ask the RE agent, which most times it's been sold by a real estate agent, the reasons for selling. And then if you want, ask anything you like, to be honest. The more you know about the house, the more comfortable you're going to feel about buying it. But another one, but maybe price expectation. So you know whereabouts to place your offer. A real estate agent's not allowed to disclose what other people have offered, right?
Correct.
But you could give a ballpark figure of what a house would expect to go for.
Yes, absolutely. I only have two questions. Do you like it and do you want to buy it? That's it? Because if you like it and it suits your needs, fine.
From a solicitor's point of view, I'd probably ask EQC questions if it's a freelance one.
So just what the damage was, do they have evidence of it, and do they have evidence that it's been completed? So they're sort of the questions that you want to see. And if not, why don't they have that information?
Yeah, that's actually really important, to be honest. All the properties we take to the market, we have to get all the insurance information here at Harcourts, and evidence that everything's been done. If it hasn't been done, it becomes an as-is, where-is property, and we aren't allowed to put any properties in our system unless we have all that information about what the damage is, what's been done to rectify it, all that sort of stuff. So when we draw up a contract for you, when you purchase a house, if it was pre-earthquake and it's all been repaired, we do an assignment of settled claims over to you, so that if there is any problem that comes up in the future, like, someone might be crawling under the house one day and there's, one pile that got missed or something like that, that the remedial team, they have to sort it out, and you own the claim when you buy the house because it's been assigned to you. So that's pretty reassuring with everything we've been through.
Anyone else? No? Amazing.
You were saying that, how long do you have to live in the house if you have a Homestart loan?
6 months.
6 months.
Yeah.
I may have misheard. I thought that Emma said you can't use the Homestart grant towards the initial deposit, only settlement.
Yeah, so the Homestart grant can only be used towards the final settlement amount. It can't be used for your initial deposit once you've confirmed purchase.
Yeah. So, There's a difference between the initial deposit that you pay and your whole deposit that you pay for buying the house. So for the initial deposit, it's usually a smaller deposit to say, here's a sign of good faith that I want to buy your house, I'm going to put down a nominal amount of money. Most RE agents would say that's a 10% of the purchase price. So that's your initial deposit. What we're talking about is the full deposit at settlement. The Home Start grant can't be used for your initial deposit, but it can be used to make up your whole deposit at the time of buying the house. Yeah. Two different time periods.
I've got 3 daughters that want to buy homes next year, and they're in KiwiSaver, and they'll apply for a Home Start grant. But all their deposit is wrapped up in KiwiSaver and Home Start grant. So I'm trying to work out when they go and view properties and the real estate agent wants to get them across the line, and the vendor's expecting a deposit and they can't pay anything because it's all tied up. How do you work that?
So that's where the KiwiSaver funds can be used for the initial deposit, and then added to the Home Start grants to do the final deposit to buy the house.
Yeah, but at the time when you're supposed to be confirming 10 working days, you've got to fork some money out, and it's all tied up. How do they get access to that?
So now they understood that a lot of first home buyers were using KiwiSaver and the Home Start grant to purchase, and that was their sole deposit funds.
Yeah.
So they've now made the KiwiSaver funds available at that initial deposit time.
Right, so they've got to be pre-approved. And
Correct, yeah.
And they can get that out within 10 days to make the 10 working days of the contract.
That's why we suggested to try and make it 15, just to try and get that extra time period when all of your deposit funds are made up by KiwiSaver and Home Start grant, just in case there's any hiccups. And it saves us having to go back through your solicitor or whoever solicitor you're using, back to the vendor solicitor to ask for an extension.
Sorry, I understand what you're saying, but normally real estate agents require a 10% deposit. So if they're like trying to buy a property of 500k, they've got to come up with 50. If they haven't got all that in KiwiSaver, how does the real estate agent do that?
It would be matched. You just say, hey look, we've got $34,000 in our KiwiSaver. Right. It's the maximum we could put towards the purchase. The RE agents are now very aware that the KiwiSaver is the makeup of the deposit, and it just has to be 34k.
Okay.
You can't get 50 out of the stone if there's only 34 in it.
Yeah, the deposit doesn't have to legally be 10%.
Right.
In fact, you don't have to pay any deposit at all to buy a house. The deposit is basically, it's more of a goodwill gesture to show the seller that you're really serious. Because if you go in and to buy a house and you fill in a sales and purchase agreement, you've got no deposit, then you go, well, you know, that's not really great, they're not showing commitment. So if they can only do a 5% deposit, it's fine. If they can only do a 2.5% deposit, as long as we know as a real estate agent the transparency of how they're doing the transaction, a good real estate agent will be able to sell that to a seller. And a seller will be very understanding, especially if it's, you know, a lovely young couple or 3 daughters trying to get into their first home.
It's also a really good idea to have it covered off by the solicitor, because by that stage they've probably already got the process of getting the funds underway and know how much it's likely to come towards that purchase, and then fill that in the deposit area.
Yeah. And I guess that's the reason why we like doing these seminars as well. We've got like a really good team here. You know, Scott's a magician with making finance happen, and Brent's firm, KT Law, they're fantastic as well. And you know, and we're here to help and be very. I've been in the industry 21 years, so you know, I'm not some rookie that doesn't know what's going on. When I sell a property, especially to new home buyers, you know, you've got to bring the compassion in and the understanding that these people are, it's their first time. And be transparent. This is what's happening. It's not hard to sell. Don't get too close to that.
Can you talk a bit about like common mortgage structures, routes that people go down to fixed and floating mortgages, and also to do with planned durations, I suppose, as well. Big, but
yeah, well, it's very, very much down to the individual. So things can change whether you're just starting a family, you're coming into some money, you're thinking about doing an OE in 2 or 3 years' time but want to buy a house now. So all of those sorts of bits of information that come to me would change the way in which I would show a structure to you. Certainly from a bank's point of view, they want you there for 30 years, right? Because 30 years they're going to earn as much interest as they can out of you. Although I'm paid by the bank, I don't work for the bank in any way. In fact, it's one of the funniest relationships out there in regards that I beat them up on rates, I beat them up for cash, I tell them what I want out of the loan structure, and then they pay me for it. It's a very odd kind of relationship. But because I don't work for them, need to be trained by them, they don't have to buy a branch for me, they don't have to buy a computer and get all the threads for me to work for them. It's a very cheap option for you to use, I should say for the bank to use. So where that's going is the loan structure is very much centred around what you want. How aggressive do you want to be in the repayments? Do you want super security or do you want to be super aggressive? So to go into that kind of detail now doesn't really work, but to say that there would be a mixture of floating, possibly a line of credit facility if you've got a 20% deposit and you're good with money, and then a range of fixed terms would be the way to go. Didn't answer your question?
No, it's big.
Yeah, cool.
I know it's big opening.
Yeah. Come and talk to me afterwards. Happy to discuss.
How easy is it to change the term? Say you did 30 years at the start, and because only one of you was working, and then 2 years down the track, you've got a whole lot more.
Great question. Yeah.
Can you then change it to 20 years?
You can at the time that the particular loans roll over. So say if you fixed part of your loan in for 1 year, at that anniversary of 1 year, we go in and beat the banks up again on discounted rates at the time, and then we'll say, hey look, two are now back at work, they want to become more aggressive, we want to reduce the 30-year term, which is now 29, because a year's already passed, down to 23, 22, 21. It can be any number you like, to be fair. You don't have to go down in 5-year lots or anything like that.
And it's usually just 1 to 2 years fixed term.
At the moment, interest rates are doing next to nothing, despite Donald Trump waving his arms around and doing all sorts of silly things. Look, if missiles start flying, that could be a different thing, you know, with the North Korea thing, but you can't really count that in. You can't factor those kind of things in. So at the moment, the shorter term rates are pretty competitive. And there's a little bit of a bank war on at the moment. I managed to get 2 years at 4.19 today for a client, so that's why I haven't been able to get that for quite some time.
Are there any thoughts on the new government in terms of interest rates and inflation?
Yeah, look, government doesn't really drive interest rates so much. There's supposedly a war between the Reserve Bank and government. They could, you know, have a fiscal spend up, which would increase inflation, which means that the Reserve Bank would have to increase interest rates to try and curb inflation. But in general, you're long-term sort of government funded events, which there's not a lot on. You know, there's this regional $1 billion thing that Winnie's got for everyone, and this, that, and the other. They don't see that in itself changing interest rates. Bear in mind, the OCR, the official cash rate run by the Reserve Bank, pretty much changes the floating rate through to sort of the 18-month rate. And then from the 2-year rate to the 5-year rate, that's more about what happens overseas. So at the beginning of the year, we had 4.99 for 5 years. After 3 months of having our friend in America in charge, that was up to 5.99. So you'd increased those interest rates by 1% all by himself. And they've only just recently come back to about 5.69, non-discount. Anything else?
What about the effect of the new government on KiwiSaver and the grants?
If National had got in, it was going to be considerable from their pre-election promise. There wasn't much noise from Labor around it, although they're very focused on trying to grow health growth as such. So you might find that something comes along, but they said pre-election they didn't throw out any lollies in that area. Yeah, so no, not at this stage.
What are the benefits of going to a mortgage broker versus straight to the bank?
Night and day, like a switch. I work for you, not the bank. The bank are there to make as much money out of you on to get you there out as quickly as possible. There are so many fish hooks now when you go to make an application for your home loan under the Responsible Lending Act, AML rules, all sorts of things that why would you go to a bank is a better question to ask. Just, if you don't use me, use a broker. I cannot be more serious. It is just the way at the moment that there's so many fish hooks out there. You'll innocently say something and, oh, sorry, we know that is common.
From my experience, because I use Scott with all of my stuff, you know, he's a guy that will how do I say it, he will present the offering to the bank on your behalf, and he'll do it the correct way, rather than you going there and, like Scott said, maybe you'll say something they don't like. So basically, he'll pre-qualify you and make sure that what he presents is what they're looking for. Is that?
Yep. No, I can't lie, but you can package anything, right? You can make it look as good as it can possibly look. Yeah. Yeah. And that's the secret.
It's like a gift in a box without a bow.
There you go. I think that's good. Anyone else on maybe the buying process or something like that Carl could help you out, or a legal question?
I just want to say that I don't know what position you're in at the moment, but a lot of you are probably paying rent, obviously, and it's probably in some circumstances more than what you could actually pay off something that we've shown tonight. And that's pretty serious, because it's dead money when you pay rent. So again, I will reiterate that the best thing you can do is just get into the market now. It's not that scary. It really isn't. And if you're paying rent at the moment, well, you could be paying off an asset. So please, after this, if you want to have a look at those properties we showed tonight, or you want to have a look at something else, that's fine. We've got plenty of properties. Come and see Katrina at the back, or myself, and we're happy to have a chat. Make the time to sit down.
And let us know where you are on those forms that are in front of you. We won't all call you. We'll get one person to call you to see if you want to move
No.
on.
These seminars aren't to get your information and badger the hell out of you. They're actually here to help you. They help you move forward and get into home ownership.
Thanks.
Awesome.
Thank you very much.
Thanks for coming along.